And a very good morning to everybody, and welcome to the TriggerCharts pre-market rundown for Friday, October 16th, 2020. And thanks for joining me. We have a lot to talk about today because markets obviously have been moving around in quite some fashion. A lot of it news-driven, but nonetheless, the fact is markets have been moving, and we're going to take a look at some important features, some things that are going on that have been, I would say, aligning to exactly the technicals that we look at on a regular basis. So, one of the things we are going to talk about is a variety of different stocks. We'll talk about some markets. We'll talk about some indicators. And of course, if you want to for us to take a look at any of the information that you want to look at, and whether it's a stock or future or a commodity or whether it's Forex, an ETF, make sure to put that over in the chat box. That should be somewhere down on the bottom there where you have it. Hope everybody's doing well today. Can we get a quick sound check from everybody over in the chat to see if you can hear me okay today? And then we'll move on. I'll mention that this is for educational purposes only. It's not a recommendation to buy or sell any security. Future results, past results, all that are not guaranteed, of course, and investing involves a great degree of risk. So with that, we'll close that up on here. I want you to notice on the right-hand side of what we're looking at right now, you'll notice that there is a chart. We put different charts there. Oftentimes the SPY ETF, which is up about 0.45%, almost a 0.5%. Today we see that the YMs, or what we're looking at is the Dow Jones, right there on the top left, the Dow Jones futures minis are up 134 points. The ES up 15 and the Qs are up 99. Obviously, there has been a major amount of movement with all of these, and the excess movement has been seen in the NASDAQ. What we're finding is that, generally speaking, when we look at how the markets have performed up or down, what we're finding is that the NASDAQ is usually outsized. In other words, the beta of the NASDAQ right now has been a little bit greater than, let's say, the Dow or the ES. ES has been on a kind of a weird path as well. Notice on the right-hand side here, and I'm going to highlight this for you because I really want you to see this, but notice right here, we came right into support. I drew that on the number right there. I drew a quick horizontal line, and I just crossed it so you can see that we came up another V, right? This whole V, once again, seeing a sharp drawdown, and then pretty much an immediate reversal off of the bottom, very close to where we had that level of support through the altimeter. And then from there, what we saw was this move up that was very significant. And again, right in this range here, if you'll notice, we had a line, a red line right there. And actually what I'll do is I'm going to take this off so you can see this a little bit better. You notice that right here we have this line, and look, we came, I mean, if I kind of really look at that, right? I mean, let's see. The low of the day here was 343.13, and the 343.06, within 7 cents of our support level. You know, once we got above the resistance level right here, we got this nice break above. And then what happens is from there, we saw that there was a movement that kind of peaked out and turned up. And I'm going to mention something in a moment about this. And then came right back down to support, now bouncing off of that. Now, there's no magic in this. This is an algorithm that we have. And basically, the algorithm will calculate a couple different things, but it puts, of course, the emphasis on the idea of where are traders placing their bets. Where are they actually putting their money to work? And how do you figure that out? It's not just price. You know, anybody that looks at just price indicators is really doing themselves a disservice. That's why we think it's really important and vital to include volume. How much are they purchasing? Because if we are seeing price at a certain level, and of course it's only price that pays on this, you know, it doesn't really matter if you have volume or not. In theory, if you have prices moving in one direction or the other. But we can get a much better review, kind of almost an x-ray of what's happening from the institutional and the big traders who are trading to find out where they are putting their money. And that shows us in price and volume. So every single tick, every single buy or sell that goes on, we are adding that and feeding that into the algorithm and then coming up with these levels. Now, obviously, this is a pretty wide range. We're talking about 343 down to 323, a 20 point, about an 8% approximately 8% range. That's pretty wide, and that tells us that there's probably going to be continuing volatility, which is no surprise to anybody, right? I don't think anybody, if I asked you out there and said, hey, do you think there'll be more or less volatility into the election to the end of the year? I think most people would probably say that they think there's going to be more volatility. Well, that's being confirmed by how wide this altimeter range is. So we'll get to some of these things. I want to kind of mention the KRI in a second, but what is going on? Let's start over on this side over here and look at, well, stimulus is in peril. We're going back and forth. This week on a podcast I did, they said, we kind of titled it on, off, off, on, off, on, off, on. Well, that's exactly kind of the sequence of what's happening with the stimulus, and markets really, really want stimulus. I mean, right now, I think that the biggest mover of the markets is the idea of where we are in the potential for getting a stimulus deal done, whether it's $500 billion, whether it's $1 trillion, whether it's $2 trillion. Because really, even with the lockdowns that we're seeing in Europe, even with the spike in cases in the Midwest United States, COVID is kind of like, well, who cares? In fact, I would go so far as saying that the worse it gets from a coronavirus and a pandemic standpoint, the potential for more stimulus is there. And that's, I think, what markets are, in fact, trying to price in. But unfortunately, we can't cut a deal. And right now is probably the worst time ever that there is for the potential for a deal to get done, because the political ramifications and the potential for each side to hold out and not give in is, they're thinking it's good for them politically. And as we are less than, 2 weeks away or so from an election, I think they say, you know what, the hell with this. Let's just kind of wait it out and see what happens. Size and scope, right now, I think that the Republicans are putting up a $500 billion plan that will be probably shot down pretty quickly. But this is definitely the number one market catalyst right now. The other things that could be working and leading or causing markets to move is the presidential election. Now, if we believe the polls, if, there's a big question mark there, and some of us say, yeah, hey, that's good. Some of us say, no, that's not a chance. Well, I don't really care if I believe in the polls or not, but I will tell you that markets move on data. And the data that is presented is that Biden is leading the polls right now. I mean, obviously we could say, well, this one or that one, but generally speaking, there is a lead by Biden in the polls. Whether it changes tomorrow or next week's another story. What's really interesting with that is markets aren't really pricing that in. We would have thought that if we are going to see that Biden got into office, that there was going to be an increase in taxes and there was going to be a rollback of the regulations and all the things that are going on. And what would we have? Well, markets would be kind of like, well, that's not fun. I don't want that. If we see that there's going to be a change in the tax code for corporations, moving their tax rate from 21 back to 28, what does that mean? So right now what we have is a situation where there is the potential for markets to move, but I don't think markets are really pricing that in right now for whatever reason. Again, going back to the same thing again, which we need to go back to every single time, that the number one market catalyst right now is the stimulus program. Markets like liquidity. And whatever we want to say, we could utilize our technical analysis to a great deal to make ourselves some really nice profits in this kind of situation from a trading standpoint, whether it's an intraday or whatever, or it's a swing trade. Something I want to show you that I thought was really interesting. I posted this on Twitter. If you're not following me on Twitter, I would encourage you to do so. Andrew Horowitz is the Twitter handle. Just my name, no spaces, no dashes, no nothing, just right in there. But check this out. I want to show you something. This is the key reversal indicator. We've gotten a lot of interest in this. Very inexpensive indicator. What does it do? Not much. I'll tell you right now. It's not like you're looking at this all the time for intraday trades, because it only does a few things, but it does it well. What it does is use one symbol. And we use one symbol because we don't want to bring in other data. It's just a lot of reasons why we use the SPY. And is this really an indication of anything for the SPY? No. What this is, and I'll tell you what this is behind the scenes, there are several different components that are being pumped in here as well. We just use SPY because we want to make sure that that is standardized for everybody. So really what we're looking at here, if we kind of take our minds away from thinking what symbol it is, okay, is a look at the markets. It's looking at market issues, put call ratios, look at trend indicators, looking at a variety of probably 4 or 5 different psychological indicators as well as technical indicators on top of that to come up with where we are from an overbought to an oversold level. But what I really think is interesting here is when we have a consistency of, we see these clusters, see these little round dots here, these little round red dots. There are green ones too, but right now we're just seeing these overboughts happening. Usually when we see a series of these, markets are due for a correction, whether that is, significant or if it is simply just getting some of the froth off on a, that kind of call. So we had a +5 a couple of times down here. You'll notice this a few days ago. And I put this on Twitter. I said, hey, you know what? Just to let you know that we are starting to see that we are getting a little bit overdone here. And this kind of pattern where you see a few different and then a pop, same thing here. Same exact, look at this pattern. This pattern is the same exact pattern right there. You see this, a number of days moving up and then a pop, right? A gap up and a pop. That's always concerning. Now, that doesn't mean that we're not going to see the market turn around from that level, right? We don't necessarily see that. Now, we got over here, right there, a -3 or so. Didn't see an oversold situation as clearly as I would like to see it. In fact, we can go back and probably look at that all the way back to the left here, if you see that. That's what we saw. I mean, those were dramatic oversold levels that came in. Levels we've never seen before, frankly. And some of the levels we've seen, recently in the overdone area. We had a plus, I think, 7 or so over here. So that was kind of an interesting situation. Was a massive move down. Took a few weeks to get back. Anyway, when I look at this and why I look at this and what we utilize this for is just a little bit of a feel of the market. Gives you a nice gauge on the right and tells you what's going on here. But let's get back to where we were. Post-pandemic and pandemic plays, right? This is the group that we'll look at the pandemic plays. First of all, those are your Zooms. Those are your technology companies. Those are any of the names that would do well if the pandemic rages on for a long period. Remember, we are months from where it was supposed to all be over already. So one of the things that's happening here is that we're seeing that while the numbers are ticking up around the world, and France and the UK are imposing lockdowns, and Israel is just coming off a 3-week lockdown, and we're seeing the Midwest and U.S. I think we did 66,000 latest count of new cases, hospitalizations going up, etc. Well, we're seeing things like the airlines not doing well on that. Cruise lines not doing well on that. Even though they reported they're holding up okay, the airlines, but again, not a great place to be right now. That would be the post-pandemic trade. So right now there's this bifurcation in where investors are putting their money, and that is the one place from a sector rotation standpoint where we are seeing that there is a differential that really is also tied to the stimulus, because if we do get stimulus, well, the airlines will get some money out of that. Maybe the hotels will get some money out of that. But really the biggest issue right now is if you kind of split that group and you look at things like, banks, or you look at, the leisure stocks, you look at some of the technology. These areas have been working pretty much against each other when there's a better report on the virus, et cetera. In terms of earnings, we have a mixed bag for banks. Definitely selling off. The banks came in with some numbers, some of them historically high in terms of overall profitability, but yet the outlook was questionable. They also have massive increase in loan loss provisions. Of course, we saw more shenanigans from Wells Fargo where 100 employees took PPP money for themselves. There's something coming out now about maybe JP Morgan had a bunch of employees do this too. I don't even understand and can't wrap my head around how an employee of a bank can go and put in a loan application that's supposedly forgivable for themselves. Now they were fired and there's probably going to be criminal action against them. So, but the point is, I don't know what they're thinking, but what that does tell us something is really important. And I think that this crystallizes what we've been talking about for a while. The liquidity that was pushed into the system due to the PPP program, the $800 billion or so that was put out there supposedly to help small businesses and mid-sized businesses. That liquidity found its way in a lot of different areas. I have heard stories, you have probably also, I have heard stories about people getting their PPP money $500,000 and immediately wire it into their boat dealer to buy new boats. I've heard of massive vacations and parties. I've heard of all sorts of stories that are really interesting in terms of how that PPP money was utilized. I don't know if they thought it would just fall through the cracks, or maybe the business would go out of business and therefore who cares? They don't have to pay it back. I'm not sure what went on with that, but the bottom line is now we're talking about a new bill where there's a new few $100 billion that's going to go into the PPP program, and I just wonder how they're going to look at this with respect to making sure that companies that get it are utilizing it for what they're supposed to use it for, which is for keeping people on the payroll. So something interesting. But we are seeing the banks that have a higher than normal and an increasing loan loss provisions. Their net interest margin, which is a function of the yield curve, the money they take in, money they lend out, is not lining up for them very well. So banks are questionable right now. I still like some of the major banks. I think that, once we move past this, there'll be a clearing and really an opportunity there, but not so much that I'm going to really bet the farm on it. Next week, we have more financials to start the week. Then we have tech. We have Texas Instruments and we have Netflix coming out. We have Tesla, Amazon, and Intel. A lot of people thinking that we'll see some good numbers from all of these. And obviously, there'll be a lot of volatility wrapped around that. Economics, initial claims are rising. We saw 890,000 this week. That was about 60,000 more than we've seen in the last few weeks. That's a concern. We are also seeing mass layoffs come in across many different companies. The PPI, which is the Producer Price Index, also topped expectations, doubled as a matter of fact. Interesting because the CPI, which is the inflation, the theoretical inflation that you and I would feel, right? The end product, where we're paying the consumer prices, was up only 0.2%, where the PPI was up 0.4%. And the CPI dropped down from where it was. Now, a 0.2% is still a 2.4% annualized rate. So we'll see what happens there. Next week, we have housing starts. Of course, a very bright part of the economy right now as the deurbanization trends go on, as people are saying, the hell with this. I'm out of the cold weather. I'm into the warm weather. I'm out of the cities. I'm into the suburbs. I'm going to do something different. And let's not forget that right now, and if you haven't done so, just a quick side tip, you can get an interest rate on a mortgage somewhere in the neighborhood of 2.25, 2.5, 2.75%, depending on your overall time as far as a 15, 30-year mortgage, your credit rating, et cetera. But, if you can get a mortgage at 2.5%, wow, pretty good. That means you can buy a much more expensive house for the same price that you're paying right now, right, on a monthly basis. That's how people are looking at this, and that's what people are doing. People are buying houses as soon as they hit the markets. There are fights going on. There are giveaways going on. There are overpriced bids going on. Kind of crazy market right now. We're going to see housing starts, existing home sales. We're going to see the Fed's Beige book, which gives us a summary of the key areas around the country and how each of those areas and regions are doing. And we're going to see leading indicators. Today, we're going to talk about FSLY. We saw a major drop yesterday. Peril mattresses, a relatively new issue. Apple, Sports Warehouse, BLNK, and all that. So do me a favor, put your symbols into the chat, and we'll get to that as well. All right. Did I put all these in here? I think I put all these in here. All right, let's take a look at FSLY. This is a stock that I have been tracking for a while, and frankly, this move that we saw from April up all the way to this weekly now, this big move up was a big concern of mine, and we kind of had a flattened out area. We don't have enough weeks to provide this as a new issue. But what's interesting is we saw that, historically, I want to kind of zoom in here. When we saw that there was a last earnings report right about here, look at this major drop that we saw all the way down. Got down to about, the 80 range. Well, they have a major client. One of their biggest clients is TikTok. And obviously, this big rush up into earnings that we saw going into this range from the bottom, unfortunately unwarranted due to the fact that the company came out and said that one of the major clients, which was TikTok, is not providing them as much as they could get. Now, what was really cool about this, I really want to focus on this, because if you're paying attention and following the rules, let's look at very carefully what would have happened here. what would have happened is that you would have been investing here, and a couple of different times you would have said, okay, I'm kind of getting short, and then you got out. Kind of didn't get you anywhere. I'm going long. All right, I'm out. So kind of you got this consolidation going on, right? We notice that there's a blue line right here, but there's no green line, meaning that there is a green line, but it's behind the blue line. That signifies a very important level of support, double support, okay? Now, again, we saw that this consolidation is going on, and a little short was called there. You got out, a couple of dollars here or there, consolidation, and then finally a breakout. So if you were just following the rules, you were in and out a few times. This is daily. You're in and out a few times. You're making a little money, losing a little bit of money. Nothing going on really very much, right? A couple of bucks here, a couple of bucks there. Then you get a signal. Your signal shows a $95.35. Confirms out. You could have snuck in there a little earlier on the open here, right about maybe 97, 98, maybe if you waited for the next day for the bar to close and get that final confirmation. You rode it all the way up. It kind of peaked out at 135. Not bad so far, right? We're talking about a 35% return. And then what happened? Well, we saw this reversal. Now, this is kind of an interesting situation right here. But what happened more importantly was that a new altimeter was formulated, and then you got out. So let's even say that you couldn't get out right away. You got out somewhere in the middle, 125. Okay, 125 in the middle. You got out at 125, saved your buns, if you will, from that massive drop down to, I think we hit a low of about 85 yesterday. So we got you out of this because what happened was there was a change and a swing. That's one of the calculations we use, a swing of where the money coming in and out is. And if you just looked at the colorations and simply looked at the autopilot here, it showed you exactly what to do step by step of the way. Now, it says short here. Would I get in short here? Probably not. I got too much consolidation going on here for anything to happen. Below about the 80 level, which we saw that massive support, and you can just simply draw a line across, right? Let's draw a line right about there. 70, well, let's go below here. $76. That's where I'd really short right now. There's too much consolidation in here. Now, if you do get below that level, I would say maybe take a shot of it. But right now, it looks like you may see some support. And again, that consolidation in the range. Don't forget, Kramer's been pumping this thing like crazy. So he thinks that any weakness should be bought. Let's look at Purple. Purple Innovations up a little bit today. Look at this weekly chart. Again, I put these on just to give you perspective. When you get it, it looks like kind of that. This is what it would look like. 30-minute, but I'm just putting the weekly on right now to give you a perspective of where this has gone, how parabolic this has gone, and if you did have a long-term trading strategy, how much money you could make. Now, what you notice here is that, again, we saw a really cool, kind of a almost banger setup. Banger setup is something that we look at where you have the aileron, which is an add-on to the Commander Series. The Commander Series gives you this top line here, which gives you a really nice look across of where we are on a multi-time frame basis, and then gives us whether it's a long alert, short alert, where you're out, whether it's consolidating, whether it's short. So what you have right now is that on a weekly basis, for example, right here, right, we are long on the SPY. On alert on a weekly basis, long 6 bars on a daily basis. And the short term is starting to turn as well. But on Purple Innovations, a recent IPO, what I thought was really interesting was that you had this setup. Now, I'm going to draw right now where this setup is for your pleasure. Okay. We saw that we had a significant amount of a trend down, a momentum moving lower than the zero line, and that resolved and all of a sudden popped up. Well, that was consistent with it starting to move above or hold this level of support. Couldn't really get below that. Once we started getting that movement up, well, there was a signal for a long alert, and then you got out. Now, still, you're above the zero line, this whole range right here. So that's kind of looking good. Now I would start looking for when's the next long entry component, because we're seeing that there is solid momentum overall. So I'm not seeing any kind of divergence. I'm not seeing anything strange. What I'm seeing is that there is, in fact, levels of interest that are buying. The momentum is in my favor. Where is the opportunity? Well, here you go. You got an opportunity to go long right here. It got you out really quickly, so somewhere probably no loss, no gain. Then it got you long. Just closed just a hair over the top from 24, now currently trading at 30.95. Talking about a $6 move on that, which is about 25%. Again, not so bad. Now, to be honest with you, I picked this up and I didn't go through this pattern till just now. What I mean by that is I picked this up because Sleep Number did well, which we have that down on the list somewhere here. And I thought we'd see possibly some sympathy play. Here it is, Sleep Number. Sleep Number. And I thought this is one of the movers for the weekend. I thought it was interesting. Very similar pattern. Very similar pattern. We saw some great levels of overall, let's kind of zoom out a little bit here, consolidation. I mean, look at this consolidation. You could take your box tool and just simply always just draw a quick consolidation. Where's the consolidation? Well, we stayed above that. Momentum stayed positive. I like to include the aileron. It's only a few more bucks to add. One trade, you'll make all your money back from all of this if you just follow the rules, okay? So if anybody's out there, first of all, you get a 10-day free trial of any of this. You can go over to the TriggerCharts.com site, give you information. Go to the TradeStation Trading App Store. We have a lot of educational materials, user guides, all of that. Anybody that signs up right now, a new subscription to the Commander Series will get a 4-hour coaching session online that you could do it at your leisure whenever you want. So it's kind of taped and available for you. Usually $199 value. That pays for it right there as well. But let me just go back to this. You saw this great level of support and consolidation going on. Nothing kind of could really drop below those levels. And once you got that indication to go up on the buy side, the bias, just a beautiful move overall. Apple's now back in consolidation, I think. Well, it's actually not. It's a little bit above. Apple has this support level. There's really good support down about the 108 level where the lines are closer to the bottom. That's kind of a bit of a magnet. I wonder what we're going to see moving forward if we're going to start going through that level back to, give or take, the 108 level. BLNK. This is a company that does charging stations for EV vehicles. This has been in now a consolidation. We're seeing a little bit of momentum come off recently. Something to watch, though. We held very nicely. Right there, if you draw a line right across, you can look from right to left. Always look from right to left. I teach you this all the time. Look from right to left and see what's going on. So in this case, again, we have a line that is right about here. Look at that. We cross over. See this right here? So we're going right here. I'm taking the line, and I'm going across, and I'm hitting another one. Perfect support right there that is bouncing off of. I like this kind of pattern in a consolidation, looking to see if we can get above that $11 range again and see if that happens. But right now, where we are is in a consolidation pattern. Just something to look at because it's EV related. NIO, this is just ridiculous, this stock. I remember when it was trading about $5, $6, but we did see a nice move above. We see great momentum and a consistency of momentum from the aileron, but the autopilot showed a really nice move off of 21 to 29. SNBR, no, I'm sorry, that's not what I want to look at. SPWH, that's what I want to look at. Sportsman's Warehouse, if you think that gun sales and all that and outdoor activities are going to be good, momentum has changed dramatically, held support beautifully, and kind of moving above. You obviously need to get above this next level, somewhere about the 1772, to see it really take off and do well. Amazon is good. I want to look at gold for a second. Kind of interesting into the election. So here's gold. No, that's not gold. That is not gold. That is gold. We're seeing that momentum is changing once again. It kind of was just sitting there consolidating, right, in this whole range forever. I would really like to see it get a little bit higher here, but protection for for an environment that has a lot of questions with regard to the presidential election could be interesting. Hey, thanks for joining me. The 9:30 bell has rung. Futures are rocking. Markets are moving. We will see you again next Friday. Definitely check out TriggerCharts.com. Thanks so much.